I'm pulling this from a Financial Times article, which pulled numbers from Refinitiv, one of the data providers for a lot of SPACs. So here's some numbers that I was totally blown away by. So SPACs this year have raised 24 billion, of which almost all of it is U.S. based. There are almost no non-U.S. based SPACs. There's exactly 0.3 billion non-U.S. Based SPACs. And what's crazy is that $1 in 5 raised in IPO so far this year are SPACs. So SPACs are 20% of the entire IPO market in the United States. So we've been talking about Airbnb, Palantir, a bunch of these. Hell, even Pinterest has been on the bubble for a long time around an IPO. It just blows my mind to think that the actual things raising money on the public markets today are literally non-existing companies, right? They're just literally blank check companies. So there's something here about, what is it about the public markets that they can't invest in something real? They have to invest in something that's make-believe.
Well, that's what VCs have been doing with unicorns for a very long time. So we've just kind of moved it one step further up the maturity chart. Also, I'm glad to know that Americans are leading in SPACs like we are with medical bankruptcies. Fantastic. So proud of us.
We really lead in nothing. That's what we're really good at. It's financialization. but we can make fun of it. I do think one of the dynamics here that I've seen is, the decline of the hedge fund industry over the last couple of years has led to a lot of folks from the hedge fund industry moving over into SPACs. We've seen this with Alckmin. We've seen this with a bunch of other folks. I do think that there's a little bit of call it recycling of certain financial brands where there's certain personalities in the financial world, mostly in Wall Street, mostly in New York City, which are now seeing in the SPAC world, which should actually give a lot of people pause because none of these people have sort of done this before. Nonetheless, SPACs are very popular. They're off the charts. I think we've talked in the past. I was more skeptical of them. Well, they just keep raising goddamn money. So here we are in August, and we still have 4 months to go. We're already 70% ahead of last year.
Also from the FT, out of 145 SPACs they reviewed from 2015 through 2019, while the majority eventually closed mergers, more than 2/3 of those now trade below $10 IPO price. So we're seeing not great financial returns from these SPACs. So I'm just kind of amazed that all of a sudden people said, hey, remember that thing that was kind of crappy, like a junk bond? Let's just pour all the world's money into it. Is this just zero interest rate policy, making money super bored, and therefore it's sloshing around into dumb things? Because I just don't otherwise see what the hell is going on with SPACs.
I think if you have to look really, really long term, I think there's this challenge of there's so much wealth in the private markets. There's so many companies that aren't public, right? This has been the trend going on for 20 years. I think SPACs are just a response to the fact that so many companies are private and that they should be public. I mean, there's probably at least 1,000 missing IPOs from the New York Stock Exchange. In fact, there's great data. Look it up online. I'm too lazy to do it live on a show, but there's amazing data showing that the number of IPOs has declined. The total number of publicly traded companies in the United States has declined dramatically over the last 30, 40 years. And so I think SPACs are like a very weird mechanism in which people can make money. They make fees from raising a SPAC, but it's a response to the fact that there's so many private companies that really should have been public all along. So they're sort of a bridge to the public markets. I think they're going to be very popular. And if some of them do hit, which I imagine some will, once Wall Street bets and Robinhood gets all in on this, which they can because they're publicly traded, that's the beauty of SPACs. Imagine how many more we're going to see in 2021 and 2022.
I like the context you gave about why SPACs make sense, but I still struggle as sure, these companies are staying private longer, but why is it now that they're choosing to not be private anymore?
I think asset prices are part of that. I mean, if you look at where the stock market was at the start of the year on the tech side and look at where we are now, we're at new, fresh record highs. No one thought we were going to be here in late April. It was a time of fear and concern. The recession's coming, winter is here. And instead we're at all-time highs for SaaS companies. We're all-time highs for the NASDAQ. This is a great time to go out there and make some noise in the public markets. And I want to bring it back to what Danny said about there being a lot of money in the private side. Reminding me of something I read this morning, so I pulled it up. Ron Miller covered Gong.io's $200 million round. And they've been really raising money at a rapid fire cadence. And they're growing really quickly, to their credit. This is not dumb money. This is just a company that's being pretty aggressive and, more power to them. The CEO said, and I loved this quote, "There's a lot of liquidity in the market. There are very few investment opportunities. I think the investment community was waiting a little bit to see how the market shakes out, and they are betting on companies that could benefit long-term from the new normal, and I think we're one of them." there's a lot of money on the sidelines that's tired of getting 0.5% in the money market or equivalent, and it's desperate for some yield. And so that's going to just lead, I think, to this kind of explosion of dumb ideas called SPACs, and
Well,
they're going to be a
and
mess.
Gong is a great example. Another one, also from Ron Miller, which we've talked about for years now, is Snowflake.
Yeah.
Snowflake was valued 12.5 billion, 400 million projected revenue for 2020, still private, right? And it's exactly those sorts of growth opportunities that retail investors are looking to get access to.